What is the S&P 500 and should you invest in it? Hello and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. The S&P 500, which is also known as the Standard & Poor's 500 Index, is an index weighted by the market capitalization of the 500 top companies in the United States that are publicly traded. However, this list does not show us an accurate list of these companies in the United States in terms of market cap. Other criteria are considered by the index as well. This respective index is said to be a concrete determinant of the performance of American equities, by extension, and the overall stock market. Formulation of the S&P 500. The S&P 500 utilizes an index based on capitalization weight that gives a more considerable percentage to companies with a larger market cap. Determination of the weightage of every part of this index begins by adding the overall market capitalization for every company that is a part of this index. Calculation of a company's market cap is done by taking its current stock and then carrying out its multiplication using the company's outstanding shares. The S&P 500's entire market cap plus the market capitalization of every individual company, which is a part of the index, is published on finance websites. This saves investors the hassle of calculating them now and then. Calculation of each company's weightage is done by using the company's market cap and carrying out its division using the index's entire market cap. Other indices. The index is part of the S&P Global 1200 family of indices, whereas other well-known indices consist of the S&P Mid-Cap 400, representing the companies in the middle capitalization range. The S&P Small Cap 600 represents small capitalization companies, as its name says. These three collectively cover a total of 90% of the entire capitalization in the United States. This gives a combined index known as the S&P Composite 1500. How is the S&P 500 built? The S&P 500 applies by taking the equity price and multiplying it with the number of shares currently present in the market. This means that these are shares that the public can trade. The S&P carries out adjustment to the market cap of each company for the compensation of new mergers, which involves the company itself. Calculation of the index value is done by using the market caps, which have been adjusted for every single company and totaling it. Then dividing the corresponding results using something which is known as a divisor. The divisor isn't released to the public and is information that is strictly in the hands of S&P. But a company's index weighting is still able to be calculated. This provides the investors with vital information in terms of stock. If it rises or even falls, we still can get a keen sense of the impact it will have on the entire index. A company having a higher weightage is going to have more influence on the overall index compared to a company having a lower weightage. It's not rocket science. This index is probably the most quoted American index because it signifies the largest traded corporations present in the United States that are public. It gives attention to the sizable market capitalization sector. Adjustment of market caps takes place using the share numbers that are available to trade for the public. Competitors of S&P 500. Djia. A competitor of the S&P 500 is Dow Jones Industrial Average, or DJIA. This is the most preferred index of investors, considering its breadth and depth. DJIA has been termed with substantial equities from the idea of the retail investor. As per institutional investors, the S&P 500 is a more concrete representation of the equity markets in the country. This is because it consists of a higher number of stocks across all areas. DJIA contains 30 stocks compared to S&P's 500. The S&P 500 also uses a market capitalization weighting method, which gives a more significant percentage to a company having a larger market cap. At the same time, DJIA is an index that works on the weightage of pricing, giving companies with a higher stock price a higher index weightage. This market cap structure is considered to be more common than the one which is weighted by price across the United States index. NASDAQ. National Association of Securities Dealers Automated Quotations, or NASDAQ, is a stock market that trades electronic securities. A stock present on the S&P 500 index can also be present singularly or on more than one of the different NASDAQ indices. The following are the most popular indices in terms of NASDAQ. NASDAQ 100 Index includes 100 of the most significant and most commonly traded equities on NASDAQ. NASDAQ Composite Index includes more than 2,500 common stocks that are trading on NASDAQ. NASDAQ Global Equity Index, or NQGI, includes international stocks. PHLX Semiconductor Sector Index, or SOX, includes stocks of the semiconductor industry, and OMX Stockholm 30 Index, or OMXS30, Stockholm Stock Exchange's 30 most actively traded stocks. Enjoying till now? Please hit the like button, share, and comment, and yes, keep watching. Russell Indexes. Both the S&P 500 and Russell Indexes are indexes weighted in terms of market capitalization. There are a couple of major differences between them both. The S&P 500 chooses the companies in question through a committee, whereas the Russell Indexes uses a formula to pick its stocks. Secondly, no name is present, which is an overlapping that takes place amongst the S&P 500 style indices, while Russell indices are going to have only one company in terms of growth and value style indexes. Vanguard 500 Fund. This is a fund that invests in the stock of some of the largest companies in the United States. This is an exchange-traded fund that tracks the S&P 500 index as it owns all the equities within the S&P 500. This fund offers a low fee since the fund's management team is not trading actively and is instead just mirroring what the S&P 500 has to offer. Drawbacks of the 500 Index. One major limitation of this index is when stocks that are present in this index have their overvaluation done. It means that they go higher than they are supposed to go. If there is a stock that contains heavy weightage in the index, then it ends up inflating the index's overall price. A market cap that is on the rise for a company isn't an indicator of its fundamentals, since it shows the increase of the stock in value relative to the outstanding shares. With this, each company's stock price movement will have an identical index impact. Reasons to invest in S&P 500. Of course, you can only come to understand the S&P 500 once you carry out its application. We bring you a few reasons to invest in the S&P 500. Can avoid the crashing market. Any investment that you make needs to be solid enough to tolerate any loss. Most investments might end up experiencing short-term losses during a market crash, but S&P components are likely to bounce back with time. Even the worst market crashes are something the S&P has been able to overcome. Not only that, but even long-term returns have been consistent from it. Ever since this idea was conceived, it has earned an average rate of return of about 10% every year. These are low-maintenance investments. One good thing about S&P stocks is that these are low-maintenance investments. If you do not enjoy researching your stocks and diving into a company's financials, the S&P 500 may be a brilliant option because they are a hands-off investment. You don't need to pick out any particular stocks because researching individual stocks isn't carried out. These funds performed the best when invested and left alone for some time. So, the only thing which you need to do in them is invest. In easy words, it is an investment and forget scheme that is a pretty wise investment if you ask us. Diversification. A portfolio full of diversification is the key to investment success. No stocks can magically earn you a profit or can't fall. Investing your money in a single company is not a good move to pull, no matter how good of an investor you are. When investing in an S&P 500, you buy stocks from 500 different companies from various industries, ranging from tech to automobiles to other utilities. Being the most substantial companies not only in the United States but also in the world, these companies help diversify your portfolio while also being full of stocks that perform. With 3 solid reasons why you should invest in the S&P 500, here are 2 reasons why this investment scheme might not be the right one for you. Reasons not to invest in S&P 500. Beating the market is impossible. This investment might not suit everyone, especially those who think they can leave the market behind. The S&P 500 is considered a strong indicator of the stock market. This is why these funds are made to follow the market trends. The S&P 500 cannot leave the market behind. For many investors investing in it, mediocre returns are somewhat okay. However, if you want to earn higher than average returns, these funds may not be the right ones to invest in. Personalization of your portfolio can't be done. When deciding to invest in this index, you can't do anything except purchase all the current stocks in this fund. If a company or two doesn't suit your liking, then you can't just put them on the side. You have to own either all of them or none. For this very reason, this mode of investment might not be the best for people who would like a portfolio suited to their liking. With this strategy, you will simply put your money into companies you're genuinely passionate about. It's a win-win situation. Conclusion: the S&P 500 can be a solid investment for many investors, but whether this investment is suitable for you will only depend on your investment style. If you're searching for something low maintenance with a stable investment on your hands, then this index will do just fine. However, if you're looking to beat the market using your investment and would like a diverse portfolio, other options will do the trick. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.